Hey there, it's Lorne Andrews here from Dominion Lending Center's Expert Financial and OptimalFinance.ca. So today we're going to talk about saving for a down payment and how do you know when you can actually afford a home. You know, experts say the most cheapest way to do it is to make sure that you can save up to 20% for a down payment, okay? But we know that in today's world, that's not always possible. And so we're gonna talk a little bit about that towards the end when you have to put a little bit less than 20%. So here's 4 factors to consider to determine whether or not you can afford to buy. So one of the things you need to do is take a very close look at your household budget, okay? Make sure you know exactly how much money is coming in and going out. It's amazing. Statistically, there's when we look at how many families actually do not have a household budget, it is large. If you'd like a template for one, we can actually send you one, but it is something else that you should be looking at. What is your budget? Understand how much is coming in and how much is going out. The second thing is you also want to consider retirement and education. So are kids going need to go to college? What type of expenses you're going to be having? And what do you need to build for your retirement? Okay, so a few things in that too, because when you actually buy a home, the equity growth within a home can actually improve and help you for that too. But when you factor in everything, you have to make an assessment of whether buying a house makes sense or makes those goals unaffordable, because then it might not be worth it. So it's factoring all those things together. The other thing too is you want to take your employment picture into account. Because to own a home, what does the future hold for where you are? Are you self-employed? What does the business look like? Where's the trajectory of where you're going from an income standpoint, expenses and things like that as well. So those are things you need to factor in. And then the fourth thing that I was talking about at the beginning is the default insurance. So default insurance is insurance that's held by CMHC, Genworth, or Canada Guarantee. What that insurance allows you to do, it allows you to buy a home with less than 20% down, and it's really a protection for the banks. So what happens is the insurance premium gets added into the mortgage, so the bank pays the insurance, they add it into the mortgage for you, and then it's going to increase your payments by a little bit per month. It could be $20, $30, depends on the amount of the actual insurance premium. What does that do for us? It allows us to buy homes for less than 20% down. So is it better to have 20% down? Absolutely. It's because you don't have to pay that premium. However, when you're in a situation where you're thinking, okay, if I save up that 20%, I'm going to wait, and is it 1 year, is it 2 years, is it 3 year? And for the same home that you were looking for 2 years ago when you were you only maybe had 10% down payment, and then you saved up that amount of money, potentially that same property is now worth $50,000, $60,000, $70,000 more now because of the appreciating market. So it would have made more sense to buy it back then with the insurance premium, and you would have been ahead, right? So don't let that insurance premium scare you off, because it is your way to get into home ownership a lot sooner. Anyway, so what I would say is if you have any questions, please don't hesitate to reach out. But those are some of the things you need to consider in terms of saving for that down payment to make sure that you are ready to buy a home. Any questions, we're here for you, and we're looking forward to helping.